So I want to talk to you about stacking the directional deck using top-down analysis. What's top-down analysis? Oh, that's the wrong slide. Here we go. Sorry. I did that at 5 o'clock this morning. So the idea is to look at the markets themselves and derive an opinion about the market. Now, when I say the market, I mean, let's look at submarkets like the S&P 500 or the NASDAQ 100 or the Dow Jones Industrial Average or the Russell 2000. Those are the 4 markets that we look at. And the idea would be to find either the strongest bull or bear amongst those 4 market indices. Which market is going up the most or which market is going down the most. So we start there. Why do we start there? Because 80% of the market of stocks in a market move with the market pretty much. So if we can pick a market direction, if we have a solid market direction, then we can say, all right, well, amongst the stocks in that particular market, let's say the NASDAQ, for example, we might discover that tech stocks are the hottest sector. So then what you do next is out of the individual market, you find the sector that's leading that market. And then from there, you pick the stock that's leading the sector. It's kind of like a herd of horses, and we want to find the horses that are leading the herd. It's like that, either bullishly or bearishly. So we want to find these. When you do this top-down analysis, the directional probability increases. And then we can also, to pick the stock, we also want to, we can look for the stock that's leading the sector up or down, but then we can apply other directional analysis and fine tune that. And so the idea would be to really find the biggest bear or bears and the biggest, meanest bulls. All right. So we just looked at the markets. Let's take another quick look. I'm going to go through the ETFs now. Here's the SPYs. The SPYs are wrestling with 430, as you would expect. That's resistance. That's a bullish market. We look at the Qs. That's an even more bullish market. And then we can look at the diamonds. Yeah, I wouldn't do anything with the diamonds. Nope. And what about the IWM? So if you look at all of those, by far, the strongest market is the NASDAQ. Okay? So it would behoove us right now to find the tech stocks. Well, now I haven't done the sectors. So that's the market. Now, how do you find the sectors? Well, you can go to a lot of places. This is one that I like. I use it all the time. Let me show you how to get there. You go to sectorspider.com. And then you go to tools here. They've changed their website, so it's a little different. Go to tools, go to sector tracker. What's your vector, Victor? And then you can look at different time frames. So over the last month, you can see here what the hottest sectors are. Tech has been the hottest sector over the last month. All right. Consumer discretionary has been just about as hot. Now, that's not a tech sector. Let's go to 5 days. Consumer discretionary at 2.68% was stronger than tech. Tech had a little bit of a break. And then today, consumer discretionary. Now, consumer discretionary isn't in the tech, and is not really full of the tech. NASDAQ 100 is not full of consumer discretionary stocks. Consumer discretionary stocks live in the SPY primarily, SPY, which is also a bullish market. What's really cool about this one is it's right at this resistance level here. So I like consumer discretionary, but I'm only really interested in it if the stock closes, if the SPYs close above 430. And so far that hasn't happened. Let's see, Friday's close was, let's see if I can read this. Friday's close was 429.90. Resistance held. So far today, we are at 430.62. So that resistance level is holding so far. So that would say wait until the SPYs breach this point here, start trading above 430, closing there, maybe a day or two in a row, and then go after the XLY stocks. All right, there's your XLY stocks. Look at that. All right, so that's some low-hanging fruit, but I'm not prepared to hop in until we see the SPYs themselves close above 430. All right, and we got the Fed meeting on Wednesday, so it makes perfect sense to wait. But keep that on your radar. Consumer discretionary stocks after Wednesday. Start looking. If the SPYs start making a bullish run, then come into the XLY. And if you want to take a quick look at what stocks compose the XLY, let's look at a 1 month view. Consumer discretionary. If I click that there, it will show you the holdings for consumer discretionary. And guess who's on the top of the list? Tesla, which is a stock we played last week. And we made a good little profit, 13% or so in 3 days on Tesla. I would be willing to go after Tesla again right now. Other things that are a little surprising to me, I didn't realize this, but cruise lines are starting to take a run. Cruise lines are back in business. They are rushing up. Let's go to this. Let's just look at some of these stocks here. Carnival, CCL. Okay. Well, now the technicals are really compelling to me right now. And the reason is that Carnival has just gapped up. Let's check some news here. Bank of America Securities upgrades Carnival to buy from a neutral. Okay, so the Bank of America is liking Carnival. JP Morgan upgrades Carnival to overweight from neutral. I'm actually salivating right now as I speak. We might want to do something with Carnival. I know I'm off track, so I'll come back and finish the thought. Look at Royal Caribbean. And then NCLH, Norwegian. Norwegian's not as good. Why? 18 resistance. Resistance, and we're about to hit it. I wouldn't use Carnival. I would use RCL. I want to see if that's an annual high. Let's take a quick look here. Let's go to a max chart. Last time we were here, zooming in a little bit. These bars are a month now. Strong resistance right up here around 95 or so, 96. So we're at resistance, but really the last time we were here was November of 2021. So what's that, a 18-month high or so, if I'm doing my math correctly? But we do have resistance right there. Let's check out Carnival. Carnival's coming out of the ashes here. That to me is even more attractive because the stock has bounced off these lows and is really starting to take off. So Carnival has less resistance. Next resistance level on Carnival is about 18. Stock's at 14. So I would be interested in Carnival in this case for a short put spread. Where? I would say right here. 13 is as close as I'd want to get. Let's check the news real quick here. Okay, it's hitting its 52-week high. Bank of America has also upgraded Carnival Cruise Lines to a buy. JP Morgan, the same. JP Morgan overweight. So Bank of America and JP Morgan are all over all the cruise lines, lifting them up. I'm off track. I haven't finished the thread, but I'm compelled to come in here and grab some of this here. The IV is probably still a little bit elevated with all this good news. Across the board, these cruise lines are at annual highs, if not higher. Let's see what we can get right down here at 12. That's where I'd like to sell. I would go as close as 13, but no closer. Round numbers now. So let's take a look and see what's available on Carnival. All right, so what I've done here is I have options that expire on Friday, and then I've got my option chain in the simulated Thinkorswim account set to vertical. And then over here, I can start looking to see what's available. All right, so I told you I'd want to get down at 12. And look, there's no premium at 12. There's very little premium at 13 either. But let's look. We can get 3 cents on the 13 call put spread. 3 cents would be risking 47, which is not a good return on investment. 3 divided by 47 is 6%. There's a 6% profit between now and Friday. If you like that trade, let me put it up here. I would go for 4 or 5 cents, not 3. So let me post that as an alternative. But you keep looking. The idea here is to teach you to fish, not to just take the fish. So I'm going to go ahead and take you into the WhatsApp live feed. We do have a Snipers live feed if you're a subscriber to any of our products. Otherwise, just write it down if you don't have Snipers. So there's an interesting one, but go for 4 cents. I'd say at least 4 cents on that one. Now, if I want more premium, I can sell more time. So then I could say, all right, well, let's go out to the next month. And that's going to give us 6 cents. So 6 divided by 47. Oh, no, 6 divided by 44 is 14% in 2 weeks. That's a better one. And that's one I think I would want to maybe, let's see if we can get to 1250s though. Just doing some shopping. If we did the 1250s, we'd get 3 cents. We do the 13s, we get 6 or 7 cents. Let's take a look at the stock chart. Are we willing to step up to 13? Yeah, and we got news now. We got the stock setting an annual high and a slew of upgrades, one overweight and one buy from JP Morgan and Bank of America. That's really good news. So 13 would be reasonable to me. So that's the trade that I'm going to do. And it's given us 7 cents at the moment. So our risk would be 43 cents, 43. Okay, so we could do, let's see, let's put this in the tool. You just got 10 cents?
Yeah.
Live account?
Yeah.
Damn. Well, I got to get 10 cents too then. Nice job. Let me put this in Tom's tools so you can see what this would look like. I don't think we're going to get 10 cents. So Johnny got in already at 10 cents, and I can tell you that the option premium will evaporate throughout the next 30 minutes, probably. So let's create a trade here. I'm going to go to Carnival. Change the stock price. And then I'm just going to replicate what I have right here. June 23, 13 puts. So I come down here. What am I doing here? Oh, I'm in the wrong date too. Let me get to the current date. That would help. Okay, so we got June 23, selling the 13, buying the 1250. And let's just start with 1. And then I'm going to hit my risk graph. Now, this is going to be Friday's data. The stock's not going to be shown where it is currently. But if I did, let's see, the credit that I can see now is now at
35 cents and 25 cents for 12 contracts.
Okay, and then you did the June 23s, Johnny?
Yes.
Okay. Now what I see here currently is 5 cents. Now, is that worth it? Let's see. So this will do all the math I was doing verbally so you can see. So that'll give us 11% by next Friday, which is the rule of thumb is make 1% for every day you're in the trade. So this is a little shy of 14%. However, the probability of profit is not correct because currently the stock is up here at 14 or so. Is that right? The stock's at 1440. So currently the stock is up here. So this is not the correct risk graph, but at least we can see the risk. So now with $45 of risk, if I did 11 contracts, that risk would get up to $495. And so there's my max risk. That's really important. This part is critical, that you control your risk. All right. So given all of that, I like it. I think the probability of profit will be probably in the 80 percentile range. So let's see if I can get 5 cents. I'm going to ask for more, of course. I'll ask for 7, and I want 11 contracts. Let me post this one up for you as well. Actually, I'll post it here. I'll post this. So let's go for 7 cents. I'm going to leave it at 5, and I'll take 5. But I'm going to go for 7. So let me paste this in the Sniper Live. And if any of these trades fill, of course, they get tracked on the website, and we'll post those after they get filled, if they do. So this is the one I want to go after. I'm going to ask for 7. Currently, the mid price is 5. Confirm and send. Send. Johnny, the lesson that you've just illustrated to all of us is the sooner you do this, the better. So these snipers work the best in the first 5 minutes. And so it takes me a time to run through and teach and describe and all those things. So the idea here is that you learn the system and you do it yourself. It's a fun little game to play. So it's showing 6 cents. I got 7 cents right there. Let's see what the stock is doing. Yeah, it's going higher. All right. So given that it's still rising, what do we got? 21 minutes into the market. I'm going to go back to monitor, and I'll drop my price to 6 cents. It's still 1 cent higher than I was hoping to get. So let's set it at 6, confirm and send, go back to monitor. It's sitting there at 6, about to be sitting there at 6. There it is. And I'll just let that sit. And if it fills, we'll track it. Boom, we got it. We got it. So we just got 6 cents. Let me zoom back in so you can see. We got 6 cents. And that is our latest sniper trade. This will be posted on the website under the forum, I should say. And I'm going to save this in Sniper Live Trade. So now that we got 6 cents, look, we're right close to our target here. All right, so 13.6% max profit potential, 14 days, delicious. Now, this is really a good practice as well. You know, the rule is once you sell the spread for 6 cents, the instant we can buy it back for 10% of that, let's call it 1 cent, then you have a GTC order that will take you out and just completely eliminate the risk. You've captured 90% of the max profit. Go ahead and take it off. So then I come in and find CCL here under my position statement. I click each of the legs, click, control click to highlight both legs. I'm not highlighting the right thing. Click and control click, highlight both legs, right click, create closing order, and let's buy this back for a penny. It's not worth a penny right now. It's worth 6 cents. And that will be a GTC. The instant we can buy this spread back for a penny, then we have netted 6 cents or 5 cents, excuse me. So I'll hit confirm and send. And that's my little trap that's sitting out there. And the instant this spread is worth a penny, we're out. And we've captured 90% of max profit. All right, now let me complete the thread that I had started. I just got excited when I saw Carnival. It's in the hottest sector. Cruise lines are all going up together. Lots of money flowing into cruise ships, cruise companies. So probability of profit is higher, even higher. Okay, now where I was just now, again, let me take you back to where I was starting. Is we want to look at the tech sector. The Qs are the hottest sector. Tech is the hottest. Let's see what the hottest stock is in tech. So then I can go back to the sector tracker here in this free site called sectorspider.com. Go to tech, and we can see what the hottest stocks are on the tech list. No surprising, NVIDIA, Adobe, Advanced Micro Devices, Broadcom, All of those are really good candidates for bull put spreads. NVIDIA is up 35% over the last month. Adobe up 32%. So we can look at some of these stocks right now and then see how they're doing as we speak, as I speak. NVIDIA, yeah, basing. I want to see NVIDIA moving up. Adobe is a little more interesting. I like 440. I would go 420 would be better, but 420, 440 on NVIDIA would be awesome. Advanced Micro Devices, AMD. Strong. I don't like it when they're at resistance though. So 130 resistance. I don't want this stock to do this again. So the stock with the stock at resistance, I hold on Advanced Micro Devices, Avgo, Broadcom. This one's yeah.
Adobe has earnings this week.
It does. I didn't even see that. Yeah. Okay. So forget Adobe. Yeah. Earnings is right here, which thank you, Jim, is on 6/15, which is Thursday. So no on Adobe. So we can go through trade by trade, or you can also from here, now that we've identified the hottest sector in the hottest market, is we can start using some of the scanners in Tom's tools. You put this over here. That was filled. We'll put this on the website, Carnival, on just a bit later today. So let me just pull up the scanners. And from here, you know, I have a list that I've created for tech stocks. I'm going to copy this list and give it to you in the live feed so you can have them. There you go. What you want to do if you want to create this list is you copy the tech stocks and then you go to edit list and you paste those stocks in this list, select a name you like, and then hit save. All right. Now that you have that, and notice that the XLK itself is also amongst the stock symbols. So from there, you can start looking around. Like there's various scanners you can use, high, low. So of all the stocks in the XLK, that's my list, which of them are at their annual highs? On the top of the list, you've got Apple. So these three here, these four, Apple, Oracle, Adobe, are at annual highs. They were on Friday, and these others are pretty close as well. So why don't we take the top 10 of these from Apple all the way to NVIDIA, and we save them in the holding list that you can't change the name of, called My Stock List. And now I'm looking at the 10 stocks that are at or very close to their annual highs currently. I put them in my stock list, and then make it simple on yourself. Go to searcher, single strategy, put credit spreads, highest probability of profit, and then select my stock list here. And let's let the scanner do all the work. We don't have to go stock by stock. And then we can see what's on the top of the list. Advanced Micro Devices. Good God. What's good God about it? Look. Now, the scanner will give you an out-of-the-money option. So the stock on Friday was worth 125 and selling just underneath. 66% probability of profit to make 96% return on investment. What would that risk graph look like? Let's just take a look while I'm pulling that up. AMD. Oh, that's the one I just said. I'm not too interested in this one just yet until the stock clears 130. It could very easily retract and come down here to 115. Now, I do think that level will hold, but I would want to wait before I sell anything on this. I'm waiting for two things. One of them is the stock clearing 130 and starting to make a run up to 135. That's not happening. In fact, the stock has retraced. It hit, look here. The high of the day, 130.48, and then it has pulled back. It's not ready yet to breach 130. So then I wait for it to come on down here, maybe hit these lows about 115 or so, 116, hits those lows, begins a bounce like that, and then come on in and sell a 110 put spread right down here. Or even 115, which is a little close, but still, if we get our bounce, we'll get more credit down here. That's why you want to wait. I can do it right now, but if the stock drops, that spread is going to get more costly until expiration anyway, and I will be in a loss position at least temporarily. So it's better to wait for the stock to approach where you want to sell, and say 115. Wait for it to bounce off of 116 and begin to rise, and then come in and sell 115 or better 110. Further away, higher probability. So this trade will have lower probability, but more potential profit. This one will have less potential profit and more probability. All right, so I hope that makes sense. So AMD, we're not going to play with. So we go down the list here, NVIDIA. This is what's interesting. The premium is so high. That's a 21-day trade. Not super excited about a 21-day trade, but let's look at the stock chart. You can also look here. Yeah, we talked about this one. It's basing. So we could see a breach of this, especially with Wednesday coming and the stock retracing, perhaps filling the gap. Doubt it, but it is a possibility. So we skip NVIDIA. Now, Avgo is a little different. Let's see. 750. I think 750 would be cool. Let's see what the stock's doing as I speak. And then I'm looking at it.